So, credit card debt. It's the topic on the table. I had a client experience today that inspired this video. So I'm not going to go in depth on their personal situation too much, but I wanted to use some of the takeaways and the recommendations, the angles and ways I approach this to help you understand how you can assess how to best manage or possibly eliminate your credit card debt. So before we dive into this conversation, I want you to take an opportunity to support the channel so the channel can keep supporting you. I want you to like, comment down below, and subscribe. Hit the little bell icon. As you can see, I drop videos multiple times a week, if not daily. And I don't want you guys to miss anything. I'm helping you customize a personal blueprint for your prosperity. So I want you to tune in, like, comment, and subscribe. Thank you for your support. Let's dive in. So I did have a couple come in today. We had an appointment and their big focus was credit card debt. They were combining their finances. And the husband in particular had significant credit card debt. He had about $25,000 worth. So they came in with interest to find out if a personal loan might be their best option. The way I approached this conversation, this strategy session, was first helping through their transparency, helping them to figure out what exact tools that they have available to them currently. So I wanted to know about their income, any assets that they own, and what their current credit situation was. After gathering that information, then the next conversation was, are you able to manage this credit card debt or chip away at it on your own without having to borrow money? When we eliminated that reality, like, no, we don't have the excess cash flow to do that. What we do have, excess cash flow we do have, is going to get chewed up by the interest that's compounded on the credit cards. Okay, cool. The next approach to this is, do you have any assets that you can collateralize to get the access to the cash to pay off the credit card debts? In their particular case, they owned a home, but a refinance wasn't a smart option in this scenario. A cash out refinance, a HELOC, none of those options were going to be appealing at this point in time. So that was out. They didn't have any assets. So they didn't have the income. They didn't have the assets to take care of this credit card debt. The next approach was, what's your existing borrowing capacity? Okay, yes, a fixed personal loan is going to be much more attractive than your credit card debt can be. For sure, a debt consolidation with a fixed rate and a fixed loan, even if the interest rate on that fixed personal loan is high, 20 plus, 30 plus percent, in most cases, it's still not going to stack up and have the damage causing effect that your credit cards are compounding every month. So great, a personal loan may be a great option, but what are you guys' existing borrowing capacities? So after going over their credit, details about their credit, their excess income, we have to formulate now their ability to repay. And that's helping them to look at this from the lens of a lender when they're going to approach them to try to borrow this money. Because we all know the adage, banks love to lend you money when you don't need it and love to turn you around when you do. So are you guys already looking financially desperate? After some conversation, I learned that the husband is the one that's in the more pinched financial position. He has the lower income, the lower credit score, and the most debt. The wife had a pretty solid income. She had reasonable monthly expenses as far as student loans, and that was about it. And she had a higher credit score. So after we went over this information, it turned out that going out, she also already had some targeted offers from like Credit Karma, American Express. They had a credit card with American Express, and she had been targeted for some pre-qualification offers on loans. So after discussing and going over, looking at the bigger picture, it turns out that was probably their better option. So the takeaways here for you really quickly. This is how you need to be approaching your finances when it comes to credit card debt. You need to find out do I have the income to do this in-house? Do I have the ability to just buckle down on my income, budget properly, and pay these credit card debts off? If I don't, then I need to figure out what assets I have access to. If I don't have any of those, then I need to find out what my borrowing capacity is so I can figure out how to borrow cheaper or more effective money to take care of this credit card debt. There's not much debt out there worse than credit card debt. There's some, but there's not much. So if you can get your hands on a personal loan or consolidation loan, this may be the way to go. The last recommendation that I made for these clients was relationship banking, because they banked with institutions that didn't even offer personal loans at all. Crazy, right? But a lot of these larger institutions are catering to a different base and they don't offer the same products. So I recommended to them, look, you need to find a local bank or credit union or a regional bank or credit union that offers these personal loans, these debt consolidation loans, and has a specialty around it, and will value your banking relationship for a couple to a few months for you to be able to turn around in 60 to 90 days after establishing a solid relationship with them, and have them have a strong, reasonable shot at approving you for a debt consolidation loan or a personal loan. Teaching them the value of relationship banking, because now these institutions, see, these local credit unions and local banks are going to be much more likely to look at your personal total situation, and not like some of these online institutions and companies that are going to be looking at strictly your credit report or your DTI. These credit unions and banks are going to be, local banks are going to be a lot more open-minded to the bigger picture and your total relationship with them, and being willing to assess it. You're likely to have human underwriting and other beneficial factors in that relationship to improve your chances of getting access to this loan, especially if they see that this loan can directly shoot up your credit score and shoot up your ability to repay, which most of the time, consolidating credit card debt, that's exactly what's going to happen. So I hope this information was valuable to you. I enjoyed bringing it to you. I want you guys, again, like, comment, subscribe. I'm going to continue to drop little nuggets and gems like this in scenarios that I experience in my professional and personal career to help level up your finances and to put you in a better position going into the new year and beyond. So this is JP from Blueprint for Prosperity. Thank y'all for tuning in. Like, comment, subscribe. I'll see y'all in the next one.